What we're seeing is that continued story of demand, up 45% year over year, 145 million square feet of demand we're tracking in the office segment of the market.
That's just office.
Just office alone,
Wow.
and we can cover industrial and retail too, but starting with office at the top, Trophy continuing to outperform, starting in New York City, seeing major leases from Deloitte, from BlackRock, from Guggenheim, from Salesforce, who you were just covering, from WeWork. So we're seeing great cross-sector, big transactions leading the day, deals over 100,000 square feet, and also great performance from those smaller segments of the market, deals under 20,000 square feet. So good demand.
Wow. So is the worst behind us here for office?
I do think the worst is behind us for office. Yes, most certainly.
So it feels like that return to work mandate is certainly working in places like New York City. What about San Francisco, which felt the brunt of the work from home phenomenon a lot more and has been slower to recover? I imagine AI is giving this office market a big boost.
You are 100% right, Scarlett. We're seeing our fourth consecutive positive quarter in San Francisco, mostly driven by the technology industry, but also a really good size lease from Latham & Watkins. So seeing again, good diversity from the financial services sector, the legal sector, the tech sector. But it's not just San Francisco and New York. Also Hasbro making a really big commitment in Boston, Penny Mac in Dallas. And one interesting thing, I think one of the more interesting deals most recently was ServiceNow doing a really large transaction in West Palm Beach. Not something you'd necessarily see as coming, but they decided that, AI talent is also in South Florida, and they did a large transaction with Related, creating a center of talent there. So we're seeing really good demand across the entire country right now.
How about the B and C quality offices? What's going on there? Are they clearing the market? Are they, because I've seen sometimes when these properties do sell big discounts.
Yeah, I think that's right. And there's still some distress in those markets. We're a little bit too early to tell what's going to happen. I think really what this is a story of repositioning. Okay. And with the One Big Beautiful Bill, there is some tax depreciation to do that. So that's probably the story we're going to see into 26 and 27. But do you want to cover some of the industrial and retail segments of the market as well? So on the industrial side, look, it was a little bit of a rocky start. We had some big headline news, which you guys are very familiar with, that may have slowed it down a little bit. And there was a lot of new product delivery. And so that did cause a little bit of negative absorption. But we don't think this is a negative story. We think it's a recalibration. And that recalibration is going to lead to more absorption that we're looking to in the end of the year in 26 as well. And we think that in industrial, obviously robotics, AI, that the demand is just getting smarter. And we think that there's a really positive story happening here. But similar to what you were saying in the office side, that older product, it's going to need to change, right? And really what people are doing if they're going to, is that newer product, the stuff that's really delivering more purpose-built for their business in the future. And that's something that's happening across all three categories, office, industrial, and retail.
Does data center fit into industrial?
That would kind of be the most, overarching segment of it, but really data centers is in its own category alone, especially right now. And certainly it has been a very, very strong performer this year.
So what are we doing on retail space? It's been an area where a lot of the department stores for the last 15, 20 years are saying we have to lower our reduce our footprint. Where are we now? Because I see the malls kind of full.
Yeah, I think, this is what I call the quiet outperformer. Okay. So Class A malls doing extremely well. They have been 95% occupied or higher. Yeah. There hasn't been a lot of new construction in the retail category, as you're probably well aware, right? So when you have good demand and not a lot of new construction, that creates really strong fundamentals. And so we continue to see retail as a very solid performer. But similar to the other asset classes we've covered today, that B and C category, they've got some repositioning to do. And hopefully, that will continue to occur to try to compete with that more trophy or high-end product, because that's where the demand is going.
What's the number one thing the owners of that B and C space can do to make their space more attractive?
Well, the hard thing about it, as you know, is really location. They can't move that, right? So they can't move that. So that's the hardest thing to change. But other than that, it's really about, creating a sense of place. And that's true across all, office and retail categories as well. Amenitization is very real. People want to have a place that's really driving performance for them as a business. And so getting people to be excited in that, look at where you guys are in your office is a great example of that. And right on your street, great example as well. People are excited to be in New York City now.
Are there certain markets that are weaker than others, or notably weak? Because I know from the residential side, we're starting to see the backside in Florida and Texas from all that demand that we saw earlier in the building that accompanied it.
Yeah, I don't think there's anything that's particularly standing out as weak right now in the office market. I think we are seeing, pretty good performance across the major urban cores at the moment.